Hey everyone, this is June from Turning Point Life Investment. This is your weekly market analysis for the week ending on September 19th, 2009. Okay, starting with a 3-year weekly view of SPY, let's take a look at what happened this week. As we all know, we produced another positive week. Surprise, surprise. I mentioned last week that if the bulls have any more strength, we would probably retest or probably close this gap right here. And notice what happened. Top of this gap is around 108. The market this week pretty much retested that area around the 108 area, so it managed to close that gap. Now, I wouldn't be surprised if the market decides to stop or stall right here for a bit because it hit a pretty significant resistance level. Not to mention that if you look at the stochastic, it is overbought, so it's getting a bit stretched out towards the upside. Now, if I slap on the Fibonacci retracements, notice where we are. We are pretty darn close to that 50% retracement for this entire decline of the market. So we're pretty much there at that midway point. That's why I say, we're pretty much at a significant top for the market where 110 would be a perfect 50% retracement. Also, since we closed that gap. So in terms of trading, in terms of going long, I would be a little more cautious going long, especially at knowing where we are in this level. We still want to continue to go long because that's still what's working. Buyers are still coming in and buying the dips. So until that is proven wrong, then we will change our method. But right now, the method is still the same. However, knowing that, also knowing where we are in this market at near that 50% level, we still want to be cautious. We don't want to be loading the boats, putting too much chips on the table right now. Right now is where you want to be cautious. Okay, next we zoom into a daily view, 6-month daily. On Thursday and Friday, Thursday we produced a doji. Friday we saw somewhat of follow through, but honestly I don't really see this doji as any reversal potential. It just seems like it's more of just a consolidation, indecision, just the bulls taking profit. So the uptrend is still healthy, it's still intact. We are getting pretty stretched out. Notice we are overbought on daily stochastic. So we have overbought in daily and weekly. So again, that's pretty significant. And notice as well as being pretty stretched out from the moving averages. I mentioned before in my videos where every time the market stretches or gets pulled away like a rubber band away from the 20, it always has to come back and tag it. Just like here, and I wouldn't be surprised if that happens again. Either it pulls back downwards or it goes sideways. Either way, it has to work itself out to allow this overbought to come out of that stretched out condition. Now, as far as upside potential, if the market decides to make more push, one more push, I would say 110 is definitely the upside level to look for. Now, as far as downside level, any kind of support, notice how this was the previous resistance, most likely will act as support. So somewhere around the 104.50, 105 area would be a very good pullback level for this market, and especially since that's probably where that 20-day moving average will come up and meet that level. So again, I would wait for some kind of pullback, or if it continues to go sideways, either way, as soon as I see some sign of buying, I will continue once again to buy the dips, okay, and shoot for 110. If it breaks underneath 104, that I might be a little suspicious of what really is going on in the market. But as long as that 104 area holds, then I'll still be bullish, but cautiously bullish in the market. Okay, next we go into the VIX. The VIX really hasn't changed a whole lot this week. It's still trying to hang on to its dear life with this 23 support level. So we are once again seeing divergence, bearish divergence with the VIX, where the market makes a new high, but the VIX fails to make a new low. So that's a little unhealthy in terms of sentiment and the market. If we get a break of support at 23, then we can expect more bullishness to come from the market. Actually, if it does that, then that's actually very bullish, and that's almost a contrarian signal to go the other side, actually. But that's not happened yet, okay? But otherwise, if we get a spike in the VIX, then that means the correction, a deeper correction is probably occurring. Either way, right now the VIX isn't really doing a whole lot. It's still hanging on to that support level.